How about a single best chart, which goes back to the tweet? Maybe you can bring up, Karen, right now, that tweet from the president. Saw this recently. There's the chart. This is the GDP chart. Carl Riccadonna, we got the green, which is a morning in America of another time, and then down we go to the red line, which is where we are right now. The president wants to be up at 3% GDP. We're really nowhere near a run rate of 3%. Here's the tweet. West Virginia was incredible, crowds beyond, and then he commas it, and he goes, GDP at 3%, wow, exclamation point. Help us here. Does the president know something you don't know?
I think that might be nominal GDP at 3%, not inflation-adjusted GDP, because if we look at inflation-adjusted GDP, we grew about 2.6% last quarter, but that was a payback from Q1. The year-on-year rate is about 2%.
What would it take to get to 3% right now?
Well, to get to 3%, I mean, the key to understanding how we get there is to look at what has been contributing to economic growth in the cycle, and that has been consumer spending. So the point David Weston made is absolutely correct. If we're going to get to 3% GDP growth, we need to see a pickup in consumer spending, especially, and that's going to be driven by wage and salary income, which has accelerated ever so slightly year to date, but we need to see it pick up by about another percentage point. We need wage and salary income gains closer to about 5.5%. That has been unattainable in the current cycle. However, that was the prevailing trend from late 2003 all the way up till 2007 in the previous economic cycle.